Shooting star versus hanging man. Which one's the best? Let's have a look. Alright traders, welcome to you. Alright, so shooting star, hanging man, probably familiar with these, run through them very quickly, but the key part of this video is to find out which one's the best. So if you were to pick one and you're trying to align yourself with one, which would you consider the best? Now, of course, with all these videos, my opinion, subjective, plenty of people look at it very differently, but I'm putting it out there, you may agree or disagree, but I think that these are patterns that most traders quite like to see because they are powerful patterns. But if we're going to go one step further and let's say gun to the head, we had to pick one, which one would you pick? Let me know in the comment section below as we go on which one you like. Do you agree? Do you disagree with me when I reveal which one I prefer? Okay, so what's the scenario? Scenario is that the market's been pushing up and then we get either a shooting star or a hanging man at the highs, and that can indicate a reversal, and under the right conditions it's a very powerful trade. It's good as well because we can quantify the risk, we know where to put our stop loss, etc. Nice one to have in the trading arsenal, or to combine at least with other setups and strategies that you've got, maybe as a kind of trigger or something like that. Alright, so let's have a look at it. So we've got shooting star and hanging man. Can you guess which one is which? You probably all know already. Yes, hanging man is this one, so I'm going to put HM here if I can draw an H, and this one is a shooting star. So hanging man, probably because it's a man hanging and there's the rope hanging down. Shooting star because it's a star and it's shooting. I don't know. Anyway, you get the point. They make up some crazy names for these candlesticks. Anyway, so the idea is that we need to look really and drill right into this candlestick. So each one represents a day. And if you think about what I like to think about as more of an intraday trader, or someone who's at least spent many years trading intraday, especially for the first kind of decade of my trading, really intraday focused, stretching my time frames out a bit more as I kind of put more stuff into it. But intraday, still I like to think about what's happened, what's really happened that's made this candlestick shape. Okay, so let's have a look. So the shooting star is, if you think about it, the price has pushed up intraday, and if we kind of draw this here, we've kind of got this scenario here. We've opened and we've opened like here, and we've pushed up, and then we've come all the way down and we've closed here. So that's giving us red here, but we've got that kind of wick to the upside. So think about this for a moment. What's actually happened? So price has pushed on, it's an uptrend and it's carried on, continued, but at some point, for whatever reason, supply demand has shifted, all of a sudden we've seen a drive lower. And not only a drive lower, but a drive to the close. Now, that's if you've got a red candlestick. Some people will say that it's still valid if it's green. Let's just stick to red for now, so not overcomplicate things. So the theory here has got an intraday change in sentiment. Super powerful. All right, so let's look at the hanging man. So the hanging man intraday chart is going to look something like this. Are we still on the screen? We are. Hanging man is going to look something like this. There's our open. Okay, and our open is here because we've opened at highs. So now what we've done is, in fact, I'll make it a little bit, give myself a little bit more room. There's our open here. We've kind of done this, right? We've pushed lower and then we've pushed back up and we've closed here. So we're still red here, giving us that shape. But we've got our tail, so we kind of look like this, don't we? If that was the color, and that shooting star looks like this, really. Okay, so you can see the difference. And what is the real difference here? Well, the real difference is that this is showing us that buyers haven't really run out of steam yet. There are still some buyers there, but what we are seeing is there are some sellers here. So we've got this interesting scenario with the hanging man. Sellers came in and pushed it lower, so there are some sellers, and let's assume we hadn't seen many for the past prior week or whatever it was. Now we've seen some. Okay, interesting. One mark for the bears. However, bulls are still there. They still perceive that as value, the dip in price as value, and they bought it up, and we've closed at I know not highs, but we've actually recovered some of the effort. So that's interesting. The shooting star is different. The shooting star has said, hey, now the bulls have run out of puff completely and the sellers have come in. The argument could be, well, surely it just depends on the time. In this case, the bulls have come in the afternoon. In this case, the bulls have come in the morning. Now, me personally, I prefer to see this guy. Why do I prefer to see this guy? Because I think that if you have this generally is the pattern of a bull market. Now this is severe obviously because it's got this wick to the downside, but very often we see kind of a little bit of a dip in the morning, kind of these sort of tails, and then we see a rally in the afternoon. This is just a bit more of an exaggerated version of it. Yes, the open and close have changed the shape of the candle quite a bit, but ultimately that's not really as powerful in my mind as the shooting star, which has continued the normal move upwards, chug, 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 chug. But rather than closing there, all of a sudden we've seen some bearish sentiment coming. We've seen some sellers hit this thing, and it's actually gone back through the open and closed at lows, suggesting to me that the likelihood of a day 2, 3, 4 continuation is much higher than this. Now, I'm not saying that we should disregard this completely. This is super interesting as well because it could be the first time that we've had some reasonable selling. And obviously you've got some things to look at, like, you know, how deep is this wick? Did it take out the prior low? All this kind of stuff. So nothing's ever clear cut. And let me know which one you prefer. If you could only take one for the next year of your trading, which would you go with? Would you go with the hanging man or would you go with the shooting star? And those are my thoughts on it, guys. Super powerful, you know, really interesting to kind of dig in and think about what's happening on the intraday chart with these rather than just see these pretty pictures that we see online. Oh yeah, that's nice, it looks pretty, and you know, someone tells us this, we do this and it goes lower and we're all geniuses, but let's think a little bit deeper on what's actually happening. Where could it go? What could happen if it goes wrong? Where do we come out? Obviously we're going to frame our trade and look for stops above highs, etc. But I just like thinking a little bit deeper on it. So I'm interested in your comments, guys. Shooting star or hanging man? Take care, whatever you're doing. Bye bye.